Hey everyone, welcome to another edition of the Buddy Study Group. And today I think it is number one time to talk about my continued bias that long-term care specialists are superheroes, but number two, give you an idea if you don't already know and don't already take advantage of them, all of the opportunities that you have in front of you beyond long-term care in the insurance space because of the work you are already doing today. So, in layman's terms, we're going to talk cross-sell opportunities. I think you are uniquely positioned as long-term care specialists to be great cross-sellers. And this is able to take a variety of forms, right? If you choose to read into this presentation and take it as a way to meet more referral partners, if you are with a BGA and you've got, uh, you know, specialists in all sorts of product lines, this will be ways to, continue to expand opportunities for your BGA and keep those people busy and be noticed that way. If you are somebody who works in a wide variety of products already and are looking for conversation starters, you can certainly take that away. But I think no matter who you are, where you are, you'll be able to get something out of this. And I would love to hear from you all if you have good experience cross-selling long-term care with other products or vice versa. I would love to learn from you. I'm sure everybody else on the call would love to learn from you. Um, but that's what we plan to go over today. And the reason I think you guys are so well positioned is number one, long-term care takes a heck of a lot of work and it takes a heck of a lot of information gathering in order to even get to a point where you're selling a case, right? You have to know their financials. You have to know their health. There's all sorts of information that you have to take in to be able to do your job. That can also be applied to finding the need, for other products. And your natural fact find, these questions may already come up. I think that's a fantastic practice. But I also think when it comes to the client life cycle as a whole and what products fit the best at certain ages, long-term care is really toward the end of that spectrum. I obviously believe that we can pull that average age of discovery of long-term care, of purchase of long-term care up to younger ages. But I do believe this is kind of the further end of the line of planning decisions or thinking exercises that are done by clients. So if you can kind of walk them back up through the rest of the timeline, that's a good thing. But I want to talk about products that are complementary to long-term care, and vice versa. And I also just want to give you some talking points for those cross sells. All right. So, long term care, one of the hardest conversations in insurance. And we may not think of it this way, but it can be one of the hardest needs to establish within a client's mind, right? Because I think a lot of other conversations are just simply much easier to establish the need. Property and casualty, well, if it's not compulsory, like in the case of car insurance, uh, almost or fully compulsory in homeowners insurance, it's tied to assets that people use every day, depend on for their survival, and want to be made whole if they lose those things. Um, you know, even disability accident, if you're out of work and can't earn money, what does that mean for the future of your family, all the things you have in place, things of that nature. Some of the conversations are just much easier than long-term care at the end of the day. And clients can develop a degree of plausible deniability with other products as well, but we see it quite a lot with long-term care in general. Um, but you have a number of pieces of information for existing long-term care clients and prospects that can help you with those sales. But also, I think at the end of the day, there are a lot of products that work really synergistically with long-term care. I think the first one that comes up quite a lot is Medicare, right? I think that's the most common dual agentship that I see with long-term care specialists is many of them also do Medicare supplement, Medicare Advantage, Medicare Part D plans. And there's a number of reasons why I think they work well together. Number one, 65 is just kind of that age where if you haven't been thinking about it by now, you're starting to think about long-term care, you're starting to think about post-retirement life, you're starting to think about you know, old age planning. And so I think this is 60, 65, like an age where people really, really start thinking about it, unless they've had some sort of personal experience or other affinity that gets them thinking about long-term care. But also, this is the time where people are thinking about Medicare. They're finding out. People do things at the last minute. You don't find people who know the ins and outs of Medicare just walking down the street, right? The average American is going to do most of their finding out of what Medicare covers for them in that 1 to 2 years before turning 65, right? And if it's not on their own volition, it's because their mailbox is getting absolutely destroyed with, solicitation from companies about Medicare supplements, just general information from Medicare to study up on their process of actually getting their Medicare cards. It is all over, right? So it's a good time to go over what Medicare covers and what it does not cover, right? And we all know on this call, Medicare doesn't really cover what we would traditionally think of as long-term care, and definitely not full, right? Medicare is really going to provide coverage generally for that first 100 days, and definitely not in full, and definitely not for every setting, right? So helping people to understand that that's a gap in their Medicare coverage, as it has likely been a gap in their health coverage throughout their life, either through their employer or privately, that is a great time to position long-term care alongside things. I just think it's pretty synergistic timing. But for most people, I would actually say the best practice is not to wait for people to become Medicare age to also start talking to them about long-term care. The ideal is really to do it in reverse. Get the long-term care planning done well in advance, right? For many reasons, price reasons, health reasons. Um, you know, Obviously, when you're past 60, underwriters really start to take an angle on folks that are underwriting that really says this person is less likely to recover than somebody 10 or 20 years their junior based on the same health conditions, right? So it's important to make sure we can get the coverage, right? Health and wealth and all that. But then when we have that client, if they've done long-term care planning with us, you can start to plant the seed that, hey, this is an ongoing relationship, right? And I also happen to be a specialist in the Medicare world. So when it comes time to do all that Medicare planning and you're having trouble sorting through all of the envelopes that are going to be in your mailbox and all the emails that you're getting, because there are going to be tons of them. It's like you get put on a list and a bullseye gets put on your house. You can know that you can come back to me and we can walk through that planning together with somebody you know and somebody you trust, right? I think that's a big deal. And the younger you are able to get somebody in looking at long-term care, the better the experience is, the more trust that is formed, the more likely they are to come back to you for Medicare coverage, Medicare planning. So I think that's kind of the most low-hanging fruit as far as like synergy goes for a number of reasons. But, Medicare can be a bear to get into. You can ask just about anybody who does it on the side. That AHIP test that AHIP certification is quite a lot to get through. But if you get yourself over that hump and establish the knowledge or already have the knowledge, you should be using them together synergistically. So that's our most obvious, but I think there are a number of others that fit really well in conversation, in concert with each other. Disability insurance is huge. I think long-term care and disability insurance are sort of like sister products. They, for whatever arbitrary reason, I have it in my head that they just seem like sister products. They just kind of work sort of similarly in my mind, process-wise for the agent, which is why I think of it that way. But when you are speaking with clients, you know, whether they already have disability insurance and you're trying to get them to understand the importance of long-term care insurance, or they don't have either and you're trying to get them to plan for it. I think, yeah, peas and carrots. I think that's a good way to describe it, Gail. Peas and carrots. Um, you need to be able to remind the client that disability insurance is meant to replace your lost income, right? That's obviously the big reason that we look at it. If you are out of work due to a disability, some sort of illness, what have you, um, it will replace a certain percentage of your income that you can no longer realize because you can no longer go out there and earn either in your own specific job or any other job out there, right? Depending on how the coverage works. But many disability claims do have overlap with long-term care insurance claims, especially long-term disability, right? And it's important to know that, yeah, your income will be replaced by the disability insurance to some degree, designed to make you as whole as possible. But if you have a long-term care claim on your hands and you need extended care, you need somebody to come into your home and help you with your activities of daily living, or you need to go into a facility to receive that sort of care, that's going to be a bill that needs to be paid that you were not used to paying. So you're replacing the lost income, but the long-term care claim and the services that you're paying for, the professional care that you're paying for, erodes some of that income, a large portion of it potentially. So it's important to know how well they work together, especially if you have a claim that could satisfy both coverages, right? So I think that's a massive piece. It actually maintains the integrity of your replaced income from the disability. I think it just makes disability all that much more efficient for your plan if it's coupled with long-term care for many clients. Okay, so that one I think is fairly obvious, and they have sort of similar, um, underwriting that they look for. Cost of living adjustments are generally available in both products. So, process wise and introducing people to that idea is relatively synergistic, right? So I really like disability in a pairing with long-term care insurance. I don't know how many of you work in both, but I think working in both can be extremely synergistic and can help you round out a lot of clients' plans. What else do we have on my little handy dandy sheet here? Yes, critical illness insurance. How many of you out there actually work with critical illness plans? I think critical illness can be a pretty nice addition to the long-term care conversation. I think one of the big reasons that I say that is because of a natural elimination period that long-term care insurance presents, right? In the first 90 days of a long-term care claim for many plans, you will have to pay out of pocket for any expenses incurred, right? And I think critical illness and long-term care claims, again, they won't always have overlap, but there can be some very, very common overlaps. And you'll have to look at the contracts of each individual critical illness plan to see what conditions are actually covered. If you haven't worked with any critical illness, it's generally for certain illnesses, cancer, heart attack, stroke, things of that nature. At diagnosis and at claim time, you are given a lump sum that generally varies based on the condition and generally allows you to choose different face amounts of coverage, right? So if you are, for example, diagnosed with cancer, a critical illness plan could give you a 30, 50, $75,000 lump sum, which can really um, be used if this is going to be something long term and affecting ADLs. This can really help you manage medical expenses and expenses incurred in the elimination period for a long-term care plan, right? We always try to think about gap fillers. And of course, we even think about other long-term care products as gap fillers for us, right? Either a short-term care plan or something similar. I think critical illness could serve to be a really nice gap filler, or maybe I would say just a rounding out of your plan in general. But tends to be pretty complementary with long-term care because we know long-term care is not just the story of that old lady falling down in front of her house and breaking her hip and needing, 6 months to a year of nursing care to get back on her feet. It's far from it. And when we talk about disability, when we talk about critical illness, in relation to long-term care can happen at any age. Cancer claims are decently common in the long-term care world, and that age of diagnosis for certain cancers is skewing younger and younger and younger, right? Um, Cancer can trigger disability claims as well in many cases, depending on the type of cancer and severity, right? So if you have a client in front of you that really truly believes in risk management and truly wants to get some of these items taken care of for peace of mind, even at younger ages, you've got somebody who you can potentially work with on a more holistic plan. And even if you are a specialist in long-term care, you can really find ways to work other types of risk management into the conversation. It's not as if they have to buy a bundle of insurance products, you know, that day, open and shut case. But it is a way because I know folks are always looking for ways to keep in touch with their clients without being overbearing. I think doing this planning in pieces in order of priority can definitely help you to keep in touch with clients beyond just a policy review for the one plan you've sold them, right? And even if you are not working with this person directly, I think it's a great way to expand your business in, okay, I have now leads for disability. I have leads for critical illness plans. I have leads for um, Medicare supplement or Medicare Advantage, right? I think you now have those leads that you say you never have for other referral partners to be able to go out and find people who can help these clients with these products, right? And depending on the arrangement, that can be increased income for your business, but it can also be referrals coming to you, right? I think the best referral partnerships are those that reciprocate, right? If you are sending this person leads and you work in complementary industries, you can train each other how to work these cross-sell conversations in and make them part of a lasting client relationship, right? So if you can train your disability specialist referral partner on how to work long-term care into the conversation, then referrals could be making their way back to you for long-term care. So you can do this as a long-term care specialist only. You can do this as a product generalist. You just have to understand how this will work for your business and understand how these conversations flow, know enough about the other products to absolutely be dangerous and know how this affects a client's financial plan and how the products can help with it. And you can do a lot to expand your business, even if it's just meeting new long-term care prospects, because it can at times be difficult, especially when you're first starting out, to remain busy. I do hear that every once in a while, folks that I just would be, my problems would be solved if my calendar was more full. This is a really productive way to fill your calendar and potentially meet referral partners or learn a new product and get set up to sell a new product. I think those things are not wasted time. There is productive time spent that doesn't involve earning premium. And I think rounding yourself out or getting more spheres of influence to receive leads from are a tremendously good use of time in just making sure your business is sustainable in the long term, right? So that's part of why I wanted to have this discussion. But again, because many of you are long-term care specialists first, I think you do a lot of the difficult legwork involved in the planning that could make you well suited for working in other products or at least setting up those conversations. So did I have any other major products that I wanted to mention here? I would love to hear from you guys. Do you have other products that you work in that I haven't mentioned? And how do you use long-term care to set up some of those conversations, if you do? Romeo, I know you work in quite a large spectrum of senior market products in general. How do you normally approach these kind of dual sale opportunities?
No, one thing I claim to have products for any situation, and that includes irrevocable burial trusts. If you're spending down to Medicaid, and I can't sell you long-term care insurance, but unless you want your children to go to the payday loan store to borrow money to pay for your funeral before that money's gone, in Wisconsin it's 17,500. You can put into an irrevocable burial trust. When the attorney does it, they charge money. When I do it, it doesn't cost money. And then, of course, the next question is, do you kids want to end up like your dad? Why don't you guys look at long-term care insurance? It
For
leads right
sure.
into referrals.
For sure. Yeah, totally agreed. Um, Doing good for one family member generally will result in having the opportunity to do good for other family members, right? So I think that's pretty natural. And again, we're talking cross sell here. I wouldn't take any of these conversations off the table when they come up, right? I think folks who only work in long-term care sometimes turn away people who are inquiring about other plans because it's just not their area of familiarity. If you've ever had that thought, I would strongly recommend just trying to get introduced to a professional in any of those products that you don't have somebody for yet, if you don't plan on becoming that person yourself. And you got to make sure the relationship is good. You got to make sure you're able to train each other, that you get along, that you see things the same way. and that you're willing to learn from each other. And I think it's just an absolutely huge opportunity for somebody to bring up something not related to long-term care and you have a place for them to go, right? I think that's the biggest thing. And I think why financial advisors sometimes feel threatened by long-term care specialists or specialists in any other insurance line and why they may tell their clients so much, I think you can self-fund. They're afraid of their client relationship going a block up the street and working with a specialist in a certain product line, getting really, really good service, and then more and more products start leaking out, and all of a sudden their assets under management start leaking out, right? People are very protective of their relationships in general. Um, but I think it is an advantage to be able to do a really good job in one product line and have somewhere else to send somebody for other needs that they may need to address.
I got an
And
example of
yeah,
that.
go for it.
I had a client sent to me by a financial planner for long-term care planning. We sold long-term care insurance, and when they picked up the policy, they made a comment. They said, we would really like to make sure we don't have kids that some of our money goes to charity. And I said, well, I don't do this, but my understanding is rather than just leave money to charity, you could take 50,000 and put it into a single premium life policy of 100,000 and double the money at death to go to the charity. But your financial planner does that. Why don't you call him? And then I called the financial planner after the left and said, hey, look, they want to do some charitable giving work. And I get more referrals from that financial planner because I said something back to him. Really good idea.
Right. Yeah, I totally agree. Um, and I realize there's a couple other avenues that I want to talk about. Obviously, if you've heard anything coming out of our mouths, coming into your email inbox over the last 2 to 4 years, there's a good chance that group long-term care is something that's mentioned. And we are working in that industry heavily. It's a large part of our business now. And I want everyone to understand that group long-term care is not competitive to individual long-term care purely. In most cases, it's actually extremely complementary. So I think one of the best prospects that you could pick up is somebody who makes their way to you, puts a policy on your desk and says, is this long-term care? I've got this coverage through my employer. Because that person has already been pre-educated to a degree on long-term care planning. Obviously, the quality of the education may vary, but at the end of the day, they made a decision to purchase or had something purchased for them by their employer. And it's an opportunity for you to show your stuff, to congratulate them for making a really good forward-thinking decision in their protection, and talk about what their group long-term care coverage might not cover, or talk about what their overall long-term care plan might look like with that group long-term care included. Many times, uh, we do see certain cases where people purchase a large amount of protection, and there are products out there that are emerging with inflation protection. But oftentimes, if you are dealing with, say, a trust mark or a Chubb plan, two aircraft carrier insurance providers, um, we don't see inflation protection on those policies very often. So that's a conversation that you can bring up that can lead into individual long-term care, right? We have the ability to do a lot more customization on the individual side, which may really help and bring value to someone. And oftentimes people buy a small starter plan, right? They may have opportunities in the future to add to that coverage through their group, but it still may not cover them to the level they feel comfortable. And you can take it from me because Mark and I have done hundreds of webinars. And if we are enrolling a plan that doesn't have inflation protection, we hear it in questions immediately. And one of the first things we talk about is on the individual market, there are plans that have inflation protection and all sorts of customization options that you can add to make sure that whatever you're buying through your employer is supplemented and works well for you and rounds out your plan. All the time we hear that. And there are employees out there who are very sharp about insurance coverage, and it's one of the first questions we get asked. So I think that's a fantastic opportunity to show the client the rest of long-term care planning, right? And explain to them the importance of what they have and what they can do beyond that. So I did want to bring that up because group long-term care continues to kind of grow as a market, and I think you're going to see that more often. They tend to be pretty synergistic and they tend to be indemnity plans, right? So you can have a second plan alongside the group plan. So beyond just that, I think individual is a great lead into group as well. You do a good job with individual planning for a business owner. They are potentially going to have an ear open for offering this to their employees. So let's see. How to fix non-inflating group long-term care would be a good study group topic. Yeah, I mean, I I agree. I think how to fix it. It's a good question. It's like how to get all the carriers comfortable with offering it in some way, shape, or form. We're starting to see it come in a number of ways. I think the standard kind of leads the way in offering inflation protection that is second to none in affordability. Um, but they do have a mechanism in the way their inflation works in most states that says you can have inflation protection on this plan, but it's only going to apply to your monthly access amount, your monthly benefit. It will not inflate your total benefit. I think that's a really interesting happy medium because carriers are worried if I'm offering guaranteed issue underwriting and I'm offering inflation protection that inflates the total long-term care benefit, how am I any better than legacy carriers who offered extreme amounts of benefits with little to no underwriting? How can I expect to set, um, a certain amount of lapse assumptions if I'm sending plans out the door that are so affordably priced and rich in benefits? But I think the inflation on the monthly amount only is kind of a cool happy medium because it starts to work like a short-term care plan. Your monthly benefit gets bigger and bigger and bigger. 5% compound definitely adds up quick, but your benefit period shrinks proportionally, right? Because your total benefit doesn't increase. I think that's an interesting way to do it. Carriers like Aflac are looking at simple inflation protection as opposed to compound, and they're actually setting maximum benefit caps, saying, your total long-term care benefit can be no more than 3 times the death benefit you purchase on the plan because it's a hybrid. So I think there are some creative ways that group long-term care is trying to offer it. But I think when you think of the off-the-leash sort of inflation protection, and even being able to customize like 1 through 5% compound for lifetime or for 20 years or 15 years, you're not going to find that today anywhere other than the individual market. Um, let's see. Yeah, Northwestern Mutual had an interesting inflation protection. I'll say that for sure. Their automatic additional purchase benefit, I wasn't necessarily a fan of. I'd rather see clients have the opportunity to grow their benefit than not, but I don't like it at kind of infinitely scaling premium to compensate either. So I think inflation protection in a product like long-term care is something that I don't think has been solved completely as far as how to price these plans when, you know, average claim age could be so different 5, 10 years from now, right? And longevity just keeps increasing for the most part. It's a very, very hard thing to nail down. But I don't think it's solved yet. And there's this sort of competition of sorts on the group side may inspire a little bit more tinkering with inflation protection that remains client centric, but makes the risk a little bit more predictable for carriers because that's important. We need the carriers here. Um, and I would just say, like, again, notes on like the cross sell in general. Stick to one product at a time unless there's a specific need. Obviously, you can introduce the idea, but I would say it's probably best to, in your introduction, talk about kind of a fuller spectrum of planning, set your focus for the product you're starting with, and on delivery or close to delivery or app submission, whatever it may be, remind them of what we still have to check off, right, in their overall plan. So, say when you're delivering their long-term care policy, when you've submitted the long-term care application, I know we talked about a number of things when we were first getting introduced to each other. Here's what I would kind of recommend as an order of operations. When do you think you might, feel ready to start checking off more of these boxes? And I would go with the highest need first. I think that's just a consultative measure to take that inspires trust. You know, I would love to jump right into long-term care planning with you, but we haven't assessed this huge outstanding life insurance need that puts your family at risk or disability need or what have you, right? We're closing in on your date to be set up for Medicare and Medicare supplement. Let's take care of that, then we can have the long-term care conversation. If you can kind of keep their focus while still keeping that running checklist for them, I think that can be something that they find helpful that you're able to do. They keep me on track is a great thing to have somebody say when they refer you to somebody else they love, right? So I think, yeah, you also are just going to have that cross sell conversation at the highest level of relief time and the highest trust time. I've delivered your policy to you. We did it, right? We went through all of this. You took the leap of faith with me. You walked on that planning journey. You found something you felt good with, and now it's here. Now you're covered. Your peace of mind is truly here. That is like a high dopamine time to start talking about other elements of planning. So I think the timing definitely, definitely matters. Um, and I also want to give a shout out to um, accident plans. I want to give a shout out to accident plans because we actually see this as an interesting complementary opportunity on the group side a lot. Accident indemnity, hospital indemnity, critical illness. The reason I bring these products up is because we see this on the group side pretty naturally as well as complementary products. Because for that younger age client that is, interested in planning, yes, you can have that long-term care conversation with them, but I think when they are young and invincible, as many of those clients are, I think a lot of the times they think the only thing that can really derail me is an accident, right? If I get into some sort of car accident or I take a nasty fall, right? That I know I'm not completely invincible. I'm not immune to an accident. We use that in our long-term care sales sometimes, right? If you offer them a solution for the accident to have coverage that their health insurance might not be able to meet during their working years, accident insurance can be a great gap filler for health insurance, but it's also a nice little natural lead into long-term care. yes, you may have an accident where you get in, get stitched up, and leave the hospital, recover for a week, and you're fine. But there are plenty of times, and everybody knows somebody who has been in some sort of car accident, had some sort of work or recreation related accident where they needed care for a number of years, maybe ongoing, right? And to get coverage at the time for that accident is great, but most of the expenses are going to occur in that long-term care, that extended care period. So I think that's another really good conversation opener for long-term care as well. So I know this kind of conversation came out a little bit scattered, um, but that's because there are just so many different entry points to this conversation, so many different people who can take advantage of this. But I really do think long-term care specialists are like insurance superheroes with how much you have to keep track of, how much you have to do good work in fact finding, how much information you need to take in. And I think it is a natural play to be able to cross sell from long-term care. There's overlap with so many different products out there. And if you feel stuck or you want to open up a new avenue, you want ways to get introduced to more referral partners, I think even if you're only interested in working in long-term care, you can be that person who develops leads for referral partners, which makes you a very attractive referral partner, makes you a referral partner worth reciprocating with, by having these sort of cross-sell conversations, right? And it naturally fits into a lot of the conversations that you're already having. So I don't expect you to go out there and, learn seven different markets and products. I don't think being a generalist is for anybody except the most committed and the people who have the resources and the time and the bandwidth and the hunger to be able to do it. But I do think having that tangential knowledge can help you at whatever level you are at. If you are a long-term care specialist, you can do some of these conversations with your eyes closed and then find a reputable expert that you can refer to and expand your business in all sorts of directions. So that's what I had planned to cover. Did anybody else have any um, other kind of cross sells that they do a really good job with that they wanted to share, or any questions, comments before we
I
wrap
had a
it?
meeting this morning with a reverse mortgage specialist. I've worked
Mm,
with them over the years. The one I worked with retired, and I found his replacement. There's so many things. You want to stay at home, I can get true freedom, but you don't have any money to pay for it. The reverse mortgage gives the money. I've sold long-term care insurance by having people reverse mortgage a house, take the money, put it in an investment, let the interest buy the long-term care insurance. They've got the money, they've got the remainder of the house. Only thing they're giving up is the interest on it. There's so many ways that reverse mortgage fits with us. And this guy is so excited. He wants a bunch of my cards and he wants to start referring people to me. And I want him because when I need a reverse mortgage, I need somebody knowledgeable to bring him in.
100%. I think that's a relatively synergistic relationship that you need an expert for on the reverse mortgage side, and somebody that you trust. And I think for a lot of the history, there was some legal barriers in the way where reverse mortgage specialists couldn't necessarily sell or be involved in the long-term care conversation. I know that has softened, or there have been some qualifiers there, but absolutely, I think that can be a huge funding source for long-term care if it's done correctly with an expert. Totally agreed.
Another thing on reverse mortgages, I had a home care agency. Uh, People call me and say, "Can you pull a rabbit out of a hat? I got a problem here." And they call me. And this woman was in her 80s. She had bought her condo using a reverse mortgage for purchase, unaware that if you have a reverse mortgage, in most cases, every year you could pull more money out of it. She had no knowledge of this. She had no money, no ability to pay for home care, didn't know what she was going to do. And when she casually mentioned that she bought her condo 16 years ago using a reverse mortgage for purchase, I said, "You can pour more money out of that." We found she had availability of 125,000. She can now pay for home care. The home care agency thinks I'm a hero. The woman thinks I'm a social worker, and all for knowing about reverse mortgages.
Yeah, yeah, it's a beautiful thing. And I do a session um generally once or twice a year on working with the referral partners. I think huge synergy there in working with a reverse mortgage professional, especially for those clients who need the help the most and feel like they have the least amount of options. It can really flip the script. Um, but you definitely need that expert there by your side, to help you through assessing the fit, right? Um, and I think working with referral partners in general, the better your relationship, the more you're able to not only train each other on making introductions, but teach each other about the products. They can show you what they're plugged into from the best of the best in their industry, and even taking in an hour webinar on a subject that you know enough to be dangerous in, but you're not a deep diver, can add a lot to your ability to conduct that conversation and refer. So I think that's super practical advice, Romeo. I think that's a great synergy. And I think, yeah, even if you are interested in staying in your lane with long-term care, there is a lot that you can do to expand your business just by starting a conversation and going out and meeting some qualified experts. So I know a lot of people go to networking events and say, I don't know what to do with my hands. I don't know what to say to people other than I do long-term care. Um, that is an excellent, excellent way to always have something to say at a networking event. I'm a long-term care specialist. I'm looking for, individuals who are at the standard I hold myself to for long-term care in other products so that we can introduce each other in conversation with our clients and become referral partners. So I always think that's the most practical way to make sure your calendar stays full and make sure there are differing sources of leads coming in that are pre-educated on risk management as a whole. So Wade Pfau has a great book on this. You remember the title, Chris? Reverse mortgages. Oh, pretty simple. Okay, we can certainly take a look. And I think maybe we can try to pull in Christine Jensen before the year's up, from Fairway Reverse Mortgage, and introduce that discussion again for those of you who haven't heard much about it. I think that would be really interesting because it's an alternative funding source that isn't always talked about, but can certainly flip the script. I think that'll do it for now then. I really appreciate y'all being here, taking this in. Hopefully you learned one or two things, add an arrow to your quiver, or at least give you some motivation to go out to a networking call and meet a couple experts that you can really get along with. So appreciate all of your time and be well, and we'll talk to you at this time next week. Thanks, everyone.
Thank you.